Hi guys, now we start our topic mutual funds. How it works. Let's see. It is the pooling of resources. Just for an example, mutual fund company investor invests in mutual fund. Then it invests in securities. Either it is bonds or equities. Now secure from securities mutual funds gets returned in form of dividend or interest, whatever it is. Now from mutual funds investors gets return in form of dividend, either capital gain, etc. Now let's see from the notes. Now see, mutual funds. What is mutual funds? It is an organization that pool resources of various investors for the purpose of investment. Now understand what is mutual funds. You can see by small diagram. Investor invests in mutual funds. Mutual funds invest in securities. From securities, mutual funds gets returns. From mutual funds, investor gets returns. What we see in the diagram exactly here we can see that in our notes. Mutual funds. Mutual funds are managed by AMC, Asset Management Company. We can see a lot of asset management companies. Now, what are the advantages of mutual funds? Okay, we can invest shares on our own, but someone may have interest. Knowledge. Someone may not. That's why if we invest in mutual funds, it is what are the main advantages? It is professionally managed, maximum returns. It's a minimization of risks because risks are majorly with the mutual funds only. Investors has no risks. Tax benefits. Modes of investment. What are the available modes of investments in mutual funds? There are two type of modes. Majorly, it is lump sum, which means we can invest one time only. We can invest in a lump sum amount. When anyone have the money, we can invest at a time. Another one is SIP. SIP everyone knows. It may be in regular intervals, like whether it's maybe monthly or weekly. We can invest in SIP. Okay, fine. What are the whether we can call it as shares or not? In mutual funds, those are called as units, not the shares. Remember, those are units, and the shareholder here is called as unit holder, not the shareholder. Remember, it's main. Now, schemes. What are the types of schemes available in mutual funds? There are two types of schemes. One is open-ended, another one is close-ended. What are the difference between those two? Open-ended. Whenever you want to invest, you can invest, and whenever you want, you can exit. But in close-ended, whenever the scheme initiates, then only you can invest and exits only at the time of maturity of the scheme. It means only after the maturity you can exit from the scheme. Let's see, open-ended. Purchases and sales majorly through company itself. As we discuss, we can exit at any time. Number of units keeps changing. Why? We can invest anytime, we can exit anytime. That's why it keeps on changing. And new units continuously offering. No maturity period, as we discussed. And price is NAV. We can discuss NAV later. And close-ended. Through recognized stock exchange, exits only after lock-in period. Please remember. And fixed number of units. Since we can invest and exit, after the scheme, that's why it has fixed number of units and fixed maturity, majorly at market price. New units only offered during launching period. Difference. Observe the difference. Next, what is entry load and what is exit load? Let's see. Entry load and exit loads are paid by the investors when investing in mutual funds. Buying units from the mutual funds and selling units of the mutual funds by the investor. Okay, it is type of small commission type. It is a type of commission. Entry load and exit load. Generally, entry load is not prevailing these days. Okay, let's see what is NAV. As we see NAV here, what is NAV? Here we see NAV, price is at NAV. Now what is NAV? NAV per unit, we can see per unit, total assets minus total external liabilities divided by total number of units to get NAV per unit. Understand? NAV per unit is equals to total assets minus total external liabilities by total number of units. Okay. Net assets. NAV is also called as value of the fund. Remember, net assets also called as total assets minus total external liabilities. What it means? Total external assets minus total external liabilities is equal to NAV. Okay, sorry. Total assets minus total external liabilities by total units is equals to NAV. NAV per unit. It is generally price paid by the investor to purchase one unit is called NAV. NAV is generally calculated in market price. If market price is not available, we can go with book value. Okay, one more example. Sorry. What is expense ratio? Expenses incurred per unit. Remember, incurred per unit by average NAV. Okay, what is average NAV? As usual, opening NAV plus closing NAV by 2. Here, average NAV. Expense ratio, remember expense ratio. Expenses incurred per unit by average NAV. Average NAV, what is average NAV? Opening NAV plus closing NAV by 2. Next. You can see some notes. Okay. We can purchase shares. 1 share, 2 share. Okay. How can we can buy units? We can buy units in fractions also. Need not be as unit. It can be purchased. Mutual funds can be purchased in fractions. Okay. Next, key information memorandum. What is key information memorandum? Means KIM. What is it? It is the document containing the info regarding the mutual scheme. Info regarding mutual scheme. It is just like prospectus, as we see in the shares. Okay. For shares, there is an IPO. For mutual funds, is there anything? Yes. For that, it is an NFO. If mutual funds doesn't describe any face value, we can go with 10 rupees. If face value is equal to rupees 10. In shares, we can generally go with 100, but in mutual fund, it is 10 rupees. Holding period return. What is holding period return? Generally, holding period return means what we gain by what we invested. Just remember this logic. What we gain by what we invested. Holding period, just identify the small logic here. NAV1 minus NAV0, which means it is year-end NAV minus opening NAV. It simply shows the gain during the year in the NAV. Gain during the year plus dividend received. What is dividend received? Any dividend received from the mutual fund company by the investor plus capital gains received. Any gains received by the investor from the mutual fund company. Okay, divided by NAV 0, which means opening NAV. NAV 0 is equal to opening NAV. NAV 1 is equals to closing NAV. Okay. CZ and dividend. As we discussed, CZ and dividend are two types. Which means CZ and dividend in mutual funds we can gain from the mutual fund company, and mutual fund companies get CZ from the securities. Understand? Okay, I will explain this. Here we can get CZ if mutual fund company sell the securities, then it get the CZ. If investor sells the units, then he also gets the CZ. Understand? That is what here it describes. Okay, one more small example, small formula which helps for you in example. Desired rate of return. It can be comes in MCQ. Desired return by the investor. Return of mutual funds minus recurring expenses into 1 minus initial expenses. Remember this formula. It can be comes in MCQs. Okay. What are the plans available in mutual funds? There are a lot of plans available in mutual funds. We can see one by one. Dividend payout plan. What is dividend payout plan? In this plan, mutual funds pay dividends to the investors directly. Okay, done. Bonus plan. What is bonus plan? In this, as bonus shares, mutual funds offer additional units to the existing shareholder. Okay, then reinvestment plan. Please you know what is reinvestment plan. In this, dividend is declared, but the dividend is not given to the investor. What he is doing, the amount of dividend is given again reinvested for purchasing additional units. They are not distributing dividend to the investors, but they are distributing, I mean, investing those dividend in the additional units at the prevailing NAV. And remember, in the same plan, not the new plan, in which investors are initially invested. And okay, how can we identify which scheme we are following? Just a small hint we can follow. We can follow the small hint. What is hint? When units are increasing, dividend is given, then, which means dividend is given means dividend is declared, and units are increasing, which means they are invested in units. That is called reinvestment plan. Okay, growth plan. In this plan, NAV is increased to the extent of growth made by the company, which means they are not reinvesting, they are not distributing dividend, nor issuing any bonus units, sorry, which means they are keep it with themselves. They are not doing anything with these things. Okay, next point, fee payable to the mutual fund manager. Important question. I mean, small question, but it can become in bits. What is fees payable? Basic fixed fee salary. Generally, mutual fund managers get the salary plus bonus plus basic. I mean, bonus plus basic. Either they can get full salary or salary plus bonus, which means if mutual funds doing great and getting more returns, then they get bonus as a percentage of on the returns. So if mutual fund is doing great, manager gets more returns. That is what we have. One question in mutual, in calculation of fees payable to the manager, you have to follow that better for better understanding. When an investor invests in mutual funds, what happens? Then NAV of the company increase, also units. Okay, we can see this point. You may have doubt how NAV increase, because they bring cash into the company. Cash means total assets. TA is increasing, so NA is anyhow increasing. Okay, if mutual fund spends expenses, how much expenses can mutual fund spends? It is based on SEBI guidelines. If mutual fund spends more expenses, then it has to be bear by the AMC. What is AMC? As we discussed earlier, it is a mutual fund company. If any mutual fund, I mean any AMC spends more money than the prescribed by the SEBI, then it has to be bear by the mutual fund company only. Okay. Okay, next point, yield per annum. Yield percentage. It is an important question in the exams. What is yield per annum? Yield per annum, how much we get? It is per year. If investment is held for 240 days, okay, and our return is 500. Okay, return is 500 by 240 days into 365 days. That is the yield per annum. If we have information is in months, then 500. If investment is held for 6 months, okay, divided by 6 into 12. Understand? If information is given in months, then denominator has to be months, and if information is given in days, denominator has to be days. And here we get based on days 365, based on months 12. Please remember that. Dividend equalization. What is dividend equalization? Dividend equalization means for every member in the mutual fund has equal importance, like that. If any existing member, what is the value of existing member? New member has to be bring that amount. If any member exits from the mutual fund, then he get that, he is receiving that NAV prevailing on that date. Okay, dividend new member gets this. New member has to pay the same amount as held by the existing member. And small note. Okay, exit load. It is after exit load, before after exit load and entry load, or before? It is before. On this we have exit load, entry load, capital gains, everything. It is a final value. Okay. Next, this small formula you have to follow. It is time weighted rate of return. There are a lot of formulas like this. Please remember this thing. What is the formula?